The numbers in our housing market are ever changing, so it is important to stay up to date in this current real estate market. I want to personally invite you to Market Insights, where we'll bring you stats, facts, and figures to keep you and your clients informed. Join us now.
Hello, ladies and gentlemen. This is Scott Kiburz with a Market Insight update for Landmark Title for March of 2023. We're going to spend about 20 to 25 minutes here today going through some market stats. Let's begin, Sarah. First things first, ladies and gentlemen, in Arizona, we have a new commissioner, Susan Nicholson. This is the end of her second week. She's brand new. She's full of energy. She is anxious to get out and meet all the people that she can. Susan Nicholson, the new Arizona Department of Real Estate Commissioner. She's in charge of all 90,000+ of us here in the state of Arizona. Next, Sarah. As we look into this month's update, once again, it's very important to look at shifts in the economy, technology, government, and societal shifts. And we're going to come back to the word perspective several times. I'm going to be referring to this page. Sarah? Couple things out there that are happening. Right now, forecasters believe that somewhere between 4 million and 1.7 million new homes could be needed at our national level. We've been behind in terms of annual build due to COVID, due to housing, etc. But we're still somewhere around 1.7 million homes short of what our national economy could use. And with that said, ladies and gentlemen, that has an impact in different regions. Our region, where we have a lot of growth in industry, we could use more than our average fair share of that in our local economy. Sarah? Another thing that's happening out there, ladies and gentlemen, is that more and more homes are being built straight to the rental market. That's something we didn't talk so much about 5-6 years ago, but it's becoming more and more the norm. The biggest thing that you take away from this research from the Census Bureau is that we've raised another 10 million homes for home ownership since 2016, and the number of rental occupied homes has stayed about the same, but it's in growth mode, and that's where we are nationally. Another key update, Sarah, next slide, is where does Arizona stand in terms of rental homes compared to the national level? Well, the U.S. right now is at 12, and Metro Phoenix is at 14%. And that seems very understandable with our winter visitor population, number one, and the amount of growth that's happening. We're just above the norm of the middle at 12, but cities like New York and Boston have very low amount of rental homes. Sarah, that's just a quick overview of the national level. Let's get into this to local level right now. So big takeaway here, ladies and gentlemen, just some trends looking back and trying to anticipate the months coming ahead. Our total actives in all the MLS were down a little bit, not quite 1,000 to 14,669. That's every home put in the MLS, Pinal County, Maricopa County, other parts of the Phoenix or the state of Arizona. Actives in Maricopa County, they too held pretty steady. They're down about 750 homes at 11,165. Our single family down about 700. What I want to have you do, ladies and gentlemen, is jump to pending, 3/4 of the way down the page, and look at the end of February, which essentially is March 1st. The numbers under the month of February were effective the morning of March 1st. Pending, we're at 4,680. That's down just a little over 300 doors compared to the month of February. So what's happening there is, if we could have had February be an average month of 30 days or even 31, we may have caught or equaled to the previous month of when we were at 5,098. Please note that the solds were up, 1,300 doors. And our solds in Maricopa were up, and our total sold single family were the highest they've been in 4 months. And look for that to be pretty consistent. Ladies and gentlemen, it is our spring buying and selling season. And the other thing, ladies and gentlemen, our buyers, sellers are already getting conditioned to houses staying on the market a little bit longer. Maybe the seller has to do some concessions to help buy down the rate, fix an item. But please know the people that are in the market today understand that it's not the same market we had 9 months ago, and go back 9 months and then go back 3 years. We had just a speed-based market. We're definitely more in a relation-based market. Sarah? So just a quick indicator here. When the market was euphoric, we had an average of 26 listings about this time a year ago per zip code. With the number we had on the first, we're averaging just right at 73 listings per zip code. That's all properties, condo, single family, etc. Sarah? Okay, so as we jump into all Maricopa and Pinal County combined, what I want you to focus on, ladies and gentlemen, is the yellow cylinder. And the median sale price per square foot is down about 5.9%, not quite 6%. That's all of Maricopa County, all of Pinal County combined. And that average median cost per square foot is $245 a square foot, down from $260 a year ago. Sarah, as we look now into actives pending sold under contract, ladies and gentlemen, what I want you to focus on are two things on this particular page for all of Maricopa County. Under contract 7712. Ladies and gentlemen, that's a good number for us compared to what we've had the last 6, 7, 9 months. A year ago, we were just over that at about 8,100. Also, ladies and gentlemen, on the bottom left graph, sold the list price for the last 24 months. You see the blue and the red lines starting to hook upwards towards 100%. Ladies and gentlemen, it's a compliment to all the listing agents and buyer agents out there. They're pricing homes at market. They're getting the homes ready to be sold in terms of preparation. There's a different expectation. And so we're getting pretty close to 100% of list price or just off from that. That 1 to 2% buffer there sometimes is the difference between a seller contribution to help buy down the rate or help the buyer in some way. Next slide, Sarah. Ladies and gentlemen, if we spend a little bit of focus up on here, month of supply and absorption rate, our month of supply has gone back to under 3 months. The next thing that's in there is our absorption rate went from the 25% range to 36% range. And so we are moving houses pretty quickly. What I'd like you to focus on just for a minute with me, ladies and gentlemen, is the blue line as it migrates through the center, which goes through June of 2020 and ends approximately May of 2022. That is that range, ladies and gentlemen, we refer to as a speed-based market. We had multiple offers. We had escalation clauses. We had a lot of people talking about, hey, we're going to waive inspection or reduce our inspection. It was a speed-based market. As we bumped out of that in July of last year to current day, our month of supply has gone up over 2 months, and our absorption rate was no longer 100%. It's now been in the 36% range. It's a very relation-based market where we need to have great relations between the buyer agent, the listing agent, the buyer, and the seller to get across the finish line quickly, easily, and effectively. Sarah? Okay, so this slide here, ladies and gentlemen, breaks out both the difference between Maricopa County and Pinal County. On the left is Maricopa County, and it's down about 6%, but its average sale price is technically $252, while Pinal County is down 4.9, and its actual median sale price per square foot is $199. Sarah? Okay, so here is some good news, ladies and gentlemen. On this slide, what's paramount to take away is this. In the center, in blue numbers, under contract, 9,119. Ladies and gentlemen, that is up 24% in the last 30 days, just under 60% in the last 90 days. And it's still up 20% from 6 months ago, yet down about 13, almost 14% from where we were a year ago. It's definitely troughed out at the bottom and on its way back up. Part of that, again, is spring season, but we're also comparing what's happened this time a year ago. Again, 82% of our homes are normal sales, and there's inventory out there to show your clients. We're seeing the tours come back. We're seeing open houses come back. It's more traditional real estate than it was during that speed-based market. Sarah, if you can help me. Okay, just a little bit of good news. This is, by the way, that was all Pinal County and Maricopa County. Next slide, please. This slide here, ladies and gentlemen, what I want to illustrate for you is the number of listings available for sale that were new to the market. And that's a run rate of just over 7,000 for the last 2 months, January and the full month of February. Is it by far what we normally see? No, but it's not too far off. A year ago, February, March, we were in just over 8,000. So we're off just by about 800 doors compared to where we were this time a year ago. Sarah? Other good news is this is under contract. If we only saw one slide today, ladies and gentlemen, this is the energy I would like to share with the group. We bottomed out under contract in December at 4,200 homes. That's the bottom of the trough as we've ascended through January and February. Ladies and gentlemen, we're getting fairly close to where our normal would be, which would just be over 8,000, another 400 or 500 doors. Again, if the month of February had a full 30 or 31 days, we may have got there. But thanks everybody for working hard with their clients, communicating. Clearly, there's a lot of work being done out there. Sarah? This is also closed for the month, 4,085. Better month than we had in the month of January in terms of closed transactions, far off from what everybody's capable doing, but the trend is upward and we're seeing more homes under contract. We're hoping that number gets even higher by the end of March. Sarah? Sarah, if we can go forward. Okay, so now, ladies and gentlemen, this is where we go in the alphabetical order for about 18 cities from Apache Junction to Tolleson. We've got 2 slides here that drill into the individual community city. Big things here that you're going to look at, month of supply, days on market, and in yellow, for instance, here in Apache Junction is down 5.1% from where it was this time a year ago, cost per square foot. What you need to know here, ladies and gentlemen, is we're just above 5%, or I'm sorry, just below 5 to 6%, or just above 5 to 6%. And we aggregate everything together, we're just around the same number that Apache Junction is sharing. Nationally, some cities are down far more than we are. So in terms of troughing out at the bottom, have we troughed out? We're getting certainly close. And then we're certainly above average in terms of home prices going down, cost per square foot. We haven't been hit as hard as some other areas. The Midwest, for whatever reason, seems to have the least impact cost per square foot. Sarah, if we go to the next slide, I want to just educate the group here one more time. Things to look at from this page 2 of every city is look at the active listings and see how many we have. Focus on under contract. And in this case for Apache Junction, they have 111 under contract, which is up 16.84% compared to a month ago and 65% increase from 3 months ago. It's actually up higher than it was this time a year ago. When you look at sold listings at 72, that too is up 22%. Slide over to new listings. So we're still putting more new listings in Apache Junction than we are solds. So if you're a listing agent in that period, know that inventory is moving, but there's also new inventory being added. So if you're the most expensive house in your zip code and you're just waiting for the market to sell out and all of a sudden yours will be the lowest price home, there's more homes coming quickly that might be put in front of yours. So we really need to watch the trends of the market, what's happening. Also, while we're here on Apache Junction, another thing that's important to show is the fix and flip market is doing well in Apache Junction. It's over 15%. That's one of the higher percents in our metro. And that they're really showing no distressed properties at all in that community. And so, Sarah, from this point forward, we're going through the alphabetical order. If you want to jump ahead for me, just a little bit of speed, but also, again, everybody on the call today can, we can send this out to them. If you slow down, Sarah, when we get to Phoenix, I just want to hover there for a minute. But our market is doing well overall, and you're seeing energy back in the marketplace. I was fortunate to even attend a broker tour yesterday, and it was just about at capacity. So that was fun to see, ladies and gentlemen. Here's Levine. Phoenix is going to be coming up shortly. And just a couple more. You're doing perfect. And here's Peoria, then should be Phoenix. Okay, let's spend a minute here, ladies and gentlemen. Phoenix is down 4.4% to 262 a square foot. Our listings are up 190%, and Lord knows we needed them. But our month of supply is not even 3 months. In fact, it's only 2.18 months of supply in Phoenix. So things are still moving quickly. Sarah, and if we go to the next slide and slow down again, let's just hover over Phoenix for another minute. Under contract is at 1749. That's up 21% from a month ago. It's 56, approaching 60% to 3 months ago. That's pretty much what we're seeing across the board in Maricopa County. Our sold listings in Phoenix were up by 1,032, which is 17% increase. In terms of sold listings, 1,032. New listings, 1,364. Ladies and gentlemen, that's not a huge increase. So there's going to be energy in competitiveness in the buying regime if we do get some relief in interest rates. If those do officially come down, if there's a new program put in, we're hearing from the national stage that interest rates should be in the 5% range by the end of the summer, and even lower by the end of the year. I've had one credible person say, we think interest rates will be in the high 4s by Christmas. Ladies and gentlemen, if we get into that marketplace with interest rates, these homes are going to burn right off. We'll be back to at least multiple offers and fewer days on market, and a little bit of a feeding frenzy. I know it gets hot in the summer, but there's just a lot of people on the sidelines ready to pounce. That's my final commentary, Sarah, and the group. I hope this is helpful for all of you. Please think of Landmark Title when you can. They do a great job. And this is something we enjoy as a value add to everybody out there in Maricopa County doing business in real estate. Have a good day out there, everyone. Sarah, thank you as always.
Thank you for watching. Please join us every month on Market Insights, where you could stay informed for you and your clients.